We're going to talk about rainfall insurance today, and it's a USDA product that maybe some of you are familiar with. Talking to a lot of people that are not familiar with this product, they may be familiar with NAP insurance, another USDA product, and we'll talk about that here in a minute. But I wrote a News and Views article a couple months ago, maybe you read about it in there, and so we'll be talking about rainfall insurance today. So how many people, if they had this vehicle, would take out insurance, full coverage on this vehicle? Anybody take out full coverage on this vehicle? I'm not seeing any hands. Probably take out liability insurance, right? What about this vehicle? Would you take out full coverage on this? See raise of hands, probably about everybody. All right, so why not this one, but we would this one? Because if it got totaled and we only had liability insurance, it'd sure be a large sum of money that would take to replace that vehicle, this particular one, not the previous one. And so when we're talking about cash flow, this is a good product, the rainfall insurance is, for a couple of different reasons. One, because of the subsidy, and two, we're going to talk about here in a minute. But this subsidy that goes along with this rainfall insurance through USDA is between 51 and 59%. The premium is subsidized by the government. So if you're okay with receiving a subsidy from the government, this product is pretty useful, and it's going to help us cash flow our operation. When things are dry, we're going to have extra cash. We should receive a payment from the insurance company without having to make a phone call within about 60 days of the end of the time period. And so that's going to help pay those bills, those increased bills because of the drought. So that's the number one reason why I like this product, is because of the subsidy. Number two is the weather. This is a graph of rainfall here in the state of Oklahoma from 1895 to present. You can see the yearly dots and then the 5-year rolling average. But what it really illustrates is over the last 15, 20 years how above normal on rainfall we have been for the state. And this is for the whole year. Each year, the average rainfall for the state is right around 34 inches. And so if we've had so many years of a wet period, when is it time for a dry period? And that's probably the second reason why I like this insurance, is the last 2 years have been pretty dry, and maybe going forward it will take subsequent drier years to average out that time, perhaps. So those are probably the two main reasons why I consider this a good product. Going forward, this is the forecast that just came out today for the United States for the drought. This is the drought map, and it's supposed to be through November 30th is what this map is for. And so you can see for most of Oklahoma, it's supposed to persist, and then this is some improvement, the hash. So things still are supposed to not be the best. NAP insurance. How many people are familiar with NAP insurance? It costs $250 from the FSA. You call them up. The deadline for this year is already passed. It's non-insured crop disaster assistance program. If you have a drought, see something that's abnormal on your operation, you call up the Farm Service Agency and you say, I've had less than normal rainfall. You're supposed to do that within 14 days of identifying that there was a disaster. There's quite a bit of things. You have to keep records of the production costs and things that you've done throughout the year to be able to qualify. And the first 50% of the loss is on our backs, the producer's back. The second 50% is when NAP insurance starts covering. So I say all this so you can compare NAP insurance to this rainfall insurance, and you can actually take out both, but it's a good comparison. So we're going to talk about Pasture, Rangeland, and Forage insurance. It's a USDA policy that's written by them, that's offered through private insurance companies across the United States. The deadline is November 15th. In the past, it was September 30th, right around there. And so this deadline is going to come up fast faster than you might think, and so it's probably better to go ahead and choose your insurance provider that you want to work with, because it takes them some time to set up the maps and give you an estimate. Most of the estimates are free of cost from talking to the insurance companies, and then when you actually take out the policy, that's when they'll talk about how much money you will pay and when you pay. While we're talking about that, one of the great things about this pasture forage insurance is the money's not due when you take it out on November 15th. Now, I encourage you to keep a cash reserve in case if it does rain so that you can pay the bill. But if you get throughout the year and it's dry and you end up having indemnity payments paid to you throughout the year that are in excess of what your premium was for the year, you end up never having to send a check to the insurance company. So that's a pretty good perk. Just make sure that you have enough cash to cover that payment along the way. All right, there's two types of insurance programs for this pasture, rangeland, and forage insurance. One is the rainfall insurance, and the second one is the vegetative. For our area, we're in the blue, it's rainfall. And so that's probably what everybody in this room needs to worry about. But there's other parts in the United States where vegetation is the way the insurance is operated. Let's talk about the rainfall. NOAA, everybody know what NOAA is? They have sites across the United States with gauges, rainfall gauges, and they use those sites to determine how much rainfall occurs in these counties. And each county has a grid system. It's clear across the United States. It's basically a 12-mile by 12-mile grid, north, south, and east and west, that makes up the whole United States. And we choose different rainfall. We'll talk about that here in a second, and that'll determine how much, when we receive a payment and how much the payment is. And the vegetative is based off of satellite imagery. And I don't know about you, but mesquite trees and cactuses, they still look green to me even when it's dry. Anybody seen a cactus lately or a mesquite tree? It's still green. And so that's one reason why people have shied away from this product in the past. Is in Oklahoma, when this first came out, it was a vegetative state. That's how the insurance product was delivered to the producers. It was only that as an option. But now in Oklahoma, we have the rainfall insurance. And so that's what we'll talk about for the remainder of this program. What is the base value of your grazing land? Each of us are from a different county pretty much here today, and the base value of what you would say your Bermuda grass field is or your native grass field is a little bit different. Each county, RMA is assigned a base value. For Carter County, for example purposes, it's $13.56 per acre is the base value of that acreage. Hayland is $140.43. So you can see there's a significant difference between the base value of grazing land and hayland. You can take this rainfall insurance product out for either hayland or grazing land for each acre that you own or rent. If you are renting a place from a landowner and they are okay with you taking out the insurance, you by all rights have the ability to take this out on your rental ground as well. Hayland is obviously more valuable because hay as a product has more value, and so we can decide how much coverage we want to take out on these two products. Each acre has to be one or the other. We can't have both grazing land and hayland on the same acre. Okay, 100% rainfall is normal rainfall, right? So normal rainfall is 100%. We get to choose a coverage level between 70 and 90% of normal rainfall. Each of those different coverage levels has a different premium, premium subsidy that's provided by RMA. At the 90% coverage level, the 90% normal, it's a 51% subsidy. 85% is a 55% subsidy. An 80% coverage level is a 55%. 75% coverage is a 59%. And a 70 is also a 59% subsidy. So you can see that the greatest subsidy is for the lowest coverage, the 70%. The 90% has, what, 8% less subsidy? But if you look at the overall program and which one's going to make me the most money, those sort of things, I think this is a good product. You want to talk to the insurance company and they'll give you a quote on your different things. But from running my analysis, usually there's still an increased return as you go from 70 to the 90% at each stop. It's just a diminishing return for each additional dollar. Why would a person take out a 70% when the subsidy is the same for the 75%? So I probably never would choose the 70%. I'd probably never choose the 80%. I'd move on up to the 75 or the 85 because the subsidy is exactly the same. Productivity factor. We talked a minute ago about grazing land for Carter County was $13.56. Let's say that's a native grass field. What is your Bermuda grass field worth? Worth a little more, right? Maybe say $21 an acre. So we get to change the productivity factor. We get to slide it up or down. 100% would be normal. That'd be the $13.56. We can slide it down to 60%. Say that's somewhere around $7. Or we could slide it up to 150%, being, say, $21, something like that. So that gives you a chance to make this specific for your operation and how much your land is worth per acre compared to the base value of your particular county that you have your ranch in. What's this going to cost you per acre? I got a lot of calls from my News and Views article that I wrote on this, and everybody, the first question, well, how much is this going to cost me? Well, as most people say, it depends, right? It depends. It depends on a lot of things. And they said, boy, this is sure complicated. And I said, well, auto insurance is complicated too, because we get to decide all these different factors and how much collision repair and how much bodily injury and all these different things. And so it is somewhat complicated. But if we break it apart and we talk to these insurance companies that are going to provide us a free quote, don't get overwhelmed. Just muck through it the first time and give it a try this first time. The premiums that I'm seeing from running some different analysis, somewhere between 35 cents and $21 an acre, somewhere around there. It just depends on your county, where in the United States you are. Obviously, the grazing land at 60% and 70% normal rainfall is going to be the lowest. The higher end is going to be the grazing land at 90% rainfall and 150% coverage. Those things are going to cause your portion of the premium to be the highest. And this would be your portion of the premium. So somewhere between $35 and $21. How many chips should you put on the table? How much money should you invest in this product? From running some different analysis, do I choose the 35 cents an acre, or do I choose the $20.63? Obviously, the $20.63 would be more chips on the table than the 35-cent premium. Okay, from my analysis, it usually has pretty much the same payback on the money. Whether you do the 35 cents or you do the $20.63, you just have more chips on the table when that day comes, when that product, yes, you do receive an indemnity payment, or no, I do not. And so you're not going to have a higher payback on your money for the lower coverage, but you're not going to have a less on the higher coverage, if that makes sense. All right? We're going to run through an example here in a minute. Okay, so if you want to know more information on this product, you can go online. And if you Google Rainfall insurance, usually RMA's website's the first one to come up. You come to this part right here, the grid ID locator. And that's where you're going to click, because first thing you need to know is what's your grid number for your particular ranch. So when you click on that, it's going to pull up something like this. And what you're going to do is zoom in to your ranch. You can take your mouse and just hit the wheelie bar and it'll scroll in, or you can type in your address. Second thing, once you identify what your grid is, the grids are 12 mile by 12 miles. You come to the decision support tool here on the left. The decision support tool allows you to look up what would have happened in the past. Every year, back to 1948, each year you can look at and say, okay, if I would have had this coverage level with this protection factor, this is how much dollars my premium would have been, and this is how much it would have paid me at the end of the year. All that can be found at the decision support tool. The view cost estimator is a tool that can be used to determine how much your premium will be going forward. So all this can be found by Googling Risk Management Agency or Rainfall Insurance. All right. The decision support tool, this one right here, the decision support tool, this is what it looks like when you select it. When you zoom in on that map, it automatically tells you what grid you're in. It tells you what county and what state. First thing you're going to do is either grazing land or hay land. It's that drop-down box. The coverage level is the percentage of rainfall, 70 to 90%. The protection factor is the 60 to 150%. That's how much your acres are worth to you compared to the county base value. Percent share is, okay, is this a partnership? So it would be a 50-50. I'd put in 50% there. If I own it 100%, all in my name, I'd put 100 there. If you lease the property, it'd be 100%. If you're the only leasee, you're not leasing it as a partner, where your partner could also take out the insurance. Insurable acres, how many acres are you wanting to insure? And then you get to pick the year between 1948 and 2012 to see what it looked like. Then you get to come over here. This is a fun part. So January and February, February and March. These time intervals are 2-month intervals, and they overlap. So you can either take out the January and February, or you can take out the February and March. You can't take out both because they cover the same time period. The maximum that a person can take out in any one time interval is 60% of their acres. So the maximum I could do in January, February is 60%. You can take out January, February, then the March, April, the May, June. It'd just be every other box. All these need to add up to 100%. Once that's done, it comes over here. It tells you what your producer premium will be. All right, so this table here came from the soil survey map, the soil survey book for Carter County, and it's talking about in each month when is the forage grown. So you can see Bermuda grass, and this is each of these lines, these rows make up 100%. So in June, 22% of the Bermuda grass is grown for the year. That's what this says. So do I take out this insurance product to offset the forage growth for my operation? So would I take out on this time interval between March and November and not worry about January, February, and December? That'd be one option. Other option is consider this as an investment tool and having a return on my investment. I'm putting chips on the table, right? So how do I maximize the return of this over time? This is a product that I don't encourage anybody to take out just for 1 year, because I'd rather do a dollar cost averaging type investment where I take out this product each year. I'm not trying to time the rainfall compared to normal when it usually hits throughout the year. I'm personally going to take out where I spread it equally across this time frame. By spreading that out across the time, I'm not trying to predict weather patterns, and I'm not trying to predict when my forage growth is, but I'm trying to maximize the return of this product. And so I'm under the strategy of dollar cost averaging, spreading it out, and over a 10-year time period being better off. If you want to do it where cash flow wise, you are receiving those payments this 60 days after you've incurred maybe the hay bills and those sort of things, then consider these tables when you're deciding when to take out your insurance. Talk to your insurance provider. They're going to have past information, just like this has past information. They'll be able to tell you what's going to work best for your operation. So this information can be found at this website, www.rma.usda.gov. Okay, so where's the wash? I personally am not a big fan of insurance if I can cash flow, like we talked about those 2 automobiles, right? So normally if I have the white automobile, that first clunker, I'm not going to have the full coverage, because over time if I can cash flow, I'm better off. This is a little different than that, because unlike my auto insurance, they're providing a subsidy of 51 to 59%. And that's where you are going to be the one that's going to be making the money, and the insurance company is going to be making their money, where over time, if you can cash flow your automobile on liability, you're better off. So that's number one reason why I like this product, is because of that subsidy. If that subsidy went away in the future, then this product would not be looked upon as greatly. But there's nothing in the books for this to end. This is probably more the direction where insurance products are going to go. This is kind of like crop insurance, and where the producers that are willing to manage their risk, the government's going to work with us rather than providing legislation at the last minute because we've had a drought or a natural disaster or something. You can also select one of these 2 websites, has some information on it. My News and Views article is this one. You can Google my name, and it's one of the most recent ones that I wrote. All right, thank you.
Let's thank Joe.